Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. We have a ton of stuff to talk about. Obviously, we're going to start out today talking about the large cap tech stocks. There's some more bad news for Meta stock today, but the stock is actually up pre-market today, and there's a reason for that. If you happen to not be in the markets every day, bad news on layoffs is typically interpreted right away as a reason for the stock to go down. However, what it normally means is in the short run, it is a pop to the stock because they're actually admitting that they're cutting expenses, which should improve the bottom line a little bit. We know that there's been heavy conversations on Meta specifically about the amount of money that they're spending on the metaverse and whether or not that should be cut back or not, and whether it's a much longer term bet and how long investors are willing to wait for Meta stock. That's a whole other question, but in the short term, possibly even just for this week, we're going to take a look at some of the large cap tech stocks and see whether or not they are, dare I say it, oversold. And I usually don't like to use the term oversold because it's very vague. What we use in our community is we use a phrase that's called optimal entry. And it really comes down to is how close are you to the optimal entry? And that will tell you whether or not something is overbought or oversold. And I like to use it that way because it's a lot more measurable when you're looking at stocks. It's an actual number of what the stock normally does, as opposed to maybe just a stochastic reading that is overbought or oversold, which can stay there for quite a bit of time. So we're going to really jump into it today. We got a lot of stuff to talk about. We've got old school blue chip stock today that broke out on Friday, held the bid, closed near the highs, closed near the breakout level. We're going to take a look at that one today. We're also going to take a look at Google. We're going to break it down. Apple had some more bad news this morning. So today's going to be devoted to tech stocks, and specifically this week. There is one sector that I'm very big on trading this week that I can't wait to look at today. And I'm going to share that sector with you today. And this is going to be for the entire week because the sector is kind of popping a little bit. I just want to say, I want to say hello to Don Postman. Don, I got your email this weekend. I promise you I'll get back to you today. Thank you very much for everything. I really appreciate it. So stick around, everybody. We'll be back in just a second. Okay, so a ton of stuff to talk about here today. We're going to start out with some of the headlines. I think that's really a good place for us to start. We're going to break down. First, we're going to take a look at Meta and Facebook preparing to notify employees of large-scale layoffs. So look, we all know that what's going on with this stock right now. There is the metaverse conversation and however many billions they've spent on it up till this point. Let's just take a look at the stock, though, because we actually had somebody in our Facebook group over the weekend, and completely perfect. I get it. Everybody's got their own opinion and whatnot, talking about whether or not the market is a bear market rally or whether and why it's a bear market rally versus the fact that stocks have been rallying over the last week and a half. So I just want to take a look at that first, because mapping out the market, we work our way through the stock market power pyramid. Mapping out the market is where everything starts, because once it starts with the market, you're going to know whether or not you got the bigger picture buying pressure or selling pressure on your side. Now, if you remember, about a week and a half ago, we actually had, after that monster move off the lows, and let's actually just take a look at what I'm talking about off of that, which was over here. Okay, now since this big move when the CPI number came in and it wasn't good, this was a monster day on monster volume. Then we followed up another one over here, a monster day with monster volume. And really what that made unfold in the markets was basically 2 weeks, right? Really 2.5 weeks of solid buying, right? So here's the thing. Everybody who's involved in the stock market has different objectives for their trades. Some people are long-term investors and they're looking at the big macro picture, and that's 100% okay. Some other people like Andy Newman and a few other people in our community are short-term day traders where they're just looking at the next hour, and that's perfectly okay. But here's the thing. You need to know the time frame for your trade. You need to know the objective. How long do you plan to hold that trade? And then that's going to influence not only the entry time frame when you buy that stock, but it's also going to affect what kind of profit targets you're going for. So we actually had a quote that we mentioned a couple of weeks ago, which was after that big bottom and we continue to go to the upside, which was, I believe it's a bear market, but stocks are going up right now, so I'm buying. That's really something that a lot of us have to keep in mind, because you start to get into these mental blocks where you believe something should happen, but if it does not happen, it's hard sometimes for us to change, and we end up losing more money than we should to the stock market simply because We believe that we put in the work, but the market says something different. So we kind of mapped out this scenario in the market where on the daily chart, not only did we have a confirmed reversal here, but we had pretty darn good volume coming off the lows here and here, right? So all of that within that time frame, and at that point, we're actually back above the 50-period moving average as well. We pulled back a little bit last week after the FOMC, but you can see we're actually up a little bit again this morning. So the point that I want to get across now, whether it means the stocks that you owned coming into 2022 or the stocks that you just happen to trade last week as a swing trader and holding it, maybe a week to 10 days or whatnot, your time frame is your time frame. Don't let anybody influence what you believe is right for the time frame that you trade. Now, I want to kind of shift that over, and we're going to talk about the large cap tech stocks. I want to shift that over into a conversation about sector rotation. If you're a regular viewer of our channel, you know that we work the stock market power pyramid. We start out with the market, and then we move one layer up into the sectors, right? So basically what we're looking at is we work our way from the sectors, and then we work our way into individual industry groups, right? So we actually had a question on our coaching call yesterday that I think is important for us to discuss. Is it me or are the sectors rotating faster? I'm new to trading. How fast do sectors rotate, or institutions rotate their money through sectors every few weeks or days, right? It's a pretty darn good question. And I want to thank the person. I want to thank Sonny for bringing up that question. Every Sunday, we have our swing trade game plan meeting for the coming week, and that came up on yesterday's call. And this is all relating back to what time frame do you trade? What time frame is your objective? How long do you plan to hold the trade? Sounds kind of obvious, right? However, the problem that a lot of really smart people in the market have is the number one excuse that we hear is, I don't have the time. Well, if you don't have the time, then you shouldn't have money in the markets. There's really no other way to put it. But let's say you do have the time. Let's say you level up a little bit, you take it a little more seriously, and you have the time to take a look, right? You need to know what your trade objective is. If you have no idea, if your idea is still valid, how in the world will you know if you need to get out or if you should be holding it? So you need to identify before you put the trade on, how do I know if it's still valid, and how do I work those profitable trades? How do I know if it's not valid anymore, and how do I know when to get out? Very important part of trading. So what the point that I'm getting across is, leading into this week, sector rotation is changing pretty much every couple of weeks right now. A little bit bigger pushes to the downside, but we're rotating around. And like I said, this week, and you want to take a screenshot of this week we're looking at basic materials. So we're heading into the week based on rotation, basic materials, and this list of stocks. I'm actually going to pop this into the chat here. Everybody can take a look at that link. So that link I just put in the chat, and I'll put it in the comments a little bit later. You can take that link and at least have some ideas for this week. The point that I want to make coming out of that question about rotation is, it's only moving fast if you don't have structure for the time frame that you're trading. So in other words, like I said, Andy Newman in our community, he specifically day trades. We have other people that hold stuff for a week to 10 days, that kind of stuff, right? Maybe even a little bit longer. Once you know what your objective is, then it's easy to tell if it's still obvious or if it's changed, if it's still valid or if it's changed. So I'm talking to you right now. If you believe the market right now is overwhelming or confusing to you, that just means that you need to take a little bit of time on, after hours, on your lunch break or on the weekends or whatnot. Say, how long do I normally hold trades? And then that's going to influence which charts you learn to read the order flow and read the tape. And that will reduce all of the overwhelm in the market. And quite honestly, you won't need as much time to look at the market because you're like, that's all I'm looking for. And if I know what I'm looking for, all the other stuff is just noise. So I want to bring that kind of back to, like, obviously we got a big bookshelf in the back, right? I'm often asked, like, what are my favorite trading books of all time? And this is all tying back into order flow and tape reading and sector rotation and that kind of stuff. And I hope you can see it. But this book right here, the author's name is Humphrey B. Neal. This is actually one of my favorite trading books. I think you could pick it up. It was written in like the 1930s or whatnot. 1931, actually. This is a really, really good book. Although it's very dated, you'll read in the book that some of the entire stock market traded 500,000 shares for the day. It gives you the fundamentals of understanding the relationship between price action and volume, like I just showed you on that reversal off the lows in the market. And it also tells you how to read the collaboration between price action and volume, and how many shares, how much money was actually spent to create those patterns that we see on the charts. And one of the things that we do differently is I'm very careful never to say uptrend or downtrend. We spend a lot of time talking about order flow because, again, as you'll read in this book, there's real money being spent to create those charts. So when we're talking about the difference between chart reading and order flow stacking, which is what we do, we are teaching our members to understand, read the price action and the volume together to determine how much money was spent to create that big red or big green candle, or the indecision candles where it kind of opens and closes. So now you're not just looking at chart patterns, you're not just looking at technical analysis, you're trying to determine how much money was spent and whether or not you want to piggyback on with them. That's really kind of like upper level of trading. But once you learn how to do it, you can learn it in a very short period of time. And actually, I want to share a couple of wins with you. We had, just to really bring this point home on what it takes to be successful. This is from Braden in our community, and he's actually a relatively new member of our community. So I want to give you like the contrast between the first part where sector rotation is moving fast for somebody who's brand new to trading. Braden has been trading for a little bit of a while, but he's relatively new to our community. And we spend a lot of time talking about keeping risk down and understanding that when you take risk, you kick that loss out, you keep yourself in the game long enough to understand how to make money. And only a few trades can really make your week, provided you keep your risk small, or I should say reasonable compared to how much money you could make. And what we got from Braden this week was absolutely fantastic. One trade can make your whole week, and today made my whole week. So I'm trying to get into like the mental aspect of it right now, because a lot of people come into our boot camp, or a lot of people come into our Discord community, and the number one thing is they are trying to do everything. And once you understand that the real part of trading that gets you to the next level is understanding, first you need to know what to look at. And while you're learning how to use what to look at, and we're going to tie this all back to those tech stocks, while you're learning how to use that, it's your job to place real trades, manage the downside while you're learning different setups and while you're learning different market conditions to hold longer, or just trade for cash flow. Sometimes the market's going back and forth, and trading for cash flow is the right thing to do. I mean, I think we can all acknowledge that we've done that, where sometimes we've had a good profit and it came all the way back and we're angry. We didn't recognize the condition. That's what was available. In this particular situation here, Braden actually is really understanding how to recognize certain situations that are really lining up in a big way. Now you start to get to different levels of trading. Like Chris Frazier's been in our community now for a while, and you can see he's been here for a while. We have a setup that's called snapback trades. We've been hammering the industrial sector for a while, 2 trades there. We've been talking about the solar sector, and we've been talking about trading AMD every day. And you can see what kind of day he celebrated at the end of the day. So what I want to get across, you have 3 different levels of traders here. Somebody who's new and the market's moving too fast. They still have to learn how to interact with the market. Somebody who's been with us for just a little bit of while and finally understanding that the difference between trading and chart reading is you're looking for patterns. Trading is you're managing risk until a few trades work out. And even just 1 or 2 trades can make your entire week, your entire month. Chris has a little bit more experience where he could spot more, make more distinctions, and take advantage of more setups. And he just absolutely cleaned up last week. So here's the thing that I want to ask you. Again, a lot of trading success comes down to that what you do in your spare time is going to dictate how you spend your future. It's a kind of a quote that I made up, but it's how I live my life, where if I want to improve, I have to devote some time to getting better, right? So Chris has a lot of experience and he could notice more. So I'm asking you right now, what part of trading is holding you back? What part of the stock market are you not getting that if you understood that, everything would change in an instant? And then you have a new problem, which typically means if you're managing the downside and you remove all that overwhelm, the next problem is understanding how to make more on your winning trades. So all of that combined, you need to determine what level of trader you are right now, because each level of trading has different challenges. The first one is what to look at. The second one is how to use it. And the third one is how to use it better and more so you can scale up. All right. So I want to hop over now. I want to look at the big tech stocks that we've been watching now. Obviously, Facebook, right? You would think Facebook with this would be down right now, but it's actually, excuse me, Meta is actually up right now to 2.5%. As we said before, layoffs in the short term are kind of like you reducing your credit card expenses. You're going to start to have less monthly bills, and that's cool. You're going to have a little bit extra money. But that's a different scenario from you got a raise at your job. Getting a raise is a company increasing their sales and revenue, which Meta is not right now, and you're also decreasing your expenses at the same time. So short term, you're going to have a little bit extra money. So what we're looking for in Meta going forward is whether or not their ad revenue, which is the big dog for that company right now, kind of catches a bid again and starts to move back up in that direction. So short term, we could very well see a bounce in Meta this week simply from the layoffs. And again, history repeats itself. You've seen this happen in Hood this year, HOOD, every time they talk about layoffs or the stock spikes, that kind of thing. So keep an eye on Meta this week for a short-term tape reading buy opportunity this week if we see it follow through on the open this week. All right. Next, we actually have, after Meta, we have this big news on Apple. Apple, again, second time, I think, in a month where China COVID restrictions are hurting iPhone production. A little bit different story here. This is actually whether or not they can get what they have into the hands of their consumers. You can actually see it's all the way down here at 136 and change. If we kind of zoom out a little bit here on the weekly chart and take a look at where the support is, we got a little bit of support at 130, which is still about $6 away. And then after that, we're looking at down less than 120. This is a very different scenario for Apple. Obviously, Apple is the big dog. It's larger than almost all of these tech companies combined. But when you can't produce what you're selling, wow, that's going to hurt. So it's going to be very interesting to see if they hold the offer in Apple this week. Holding the offer means that they're advertising to sell stock and they keep pushing it down because they're dumping more supply onto the market. That's the opposite of holding the bid, where as selling is coming in, they're sitting there and they're continuing to take those shares. And when they hold the bid, they don't allow it to go down. In this case here, this week, we're going to be watching for whether or not they hold the offer in Apple and whether they keep dumping supply. Because look, let's face it, you don't have to be a business owner to understand. If you don't have inventory, that's going to affect your sales. And they have absolutely no control over this because it's a whole China lockdown based on the restrictions that they have over there. They're very, very strict with what they're allowing to happen over there. And look, who doesn't want that to get out of their life, right? As far as why the lockdown is. So possibly a little bit of a bullish rally this week in Meta. Apple looking at a little bit to the downside, which kind of takes us now over to Alphabet. And Alphabet's big thing, there was a lot of talk last week about YouTube revenue. And I want to walk through Google in a little bit of a different way. And you can see actually there's a couple of things going on right here. We have this big support level that we're sitting at right now, right? That's one reason. Now, if you remember last week, we spent some time talking about the fact that support or resistance is a risk point. It's not probability. So we need to now read the tape a little bit more and stack the reasons for a possible reversal in Google here coming off of their earnings. Now, some of the reasons we're going to be talking about right now is not only that support level, which again, that's a risk point. That's not probability of moving in your favor. It's a really big difference, right? So risk point needs a reason or a catalyst to think, okay, we've not only hit that support level, but now buyers are stepping in. So if you remember what we just talked about here in this book, again, I'll just pop that up. This entire book, probably the most valuable part of the book, is understanding the relationship between actual transactions, which we know is volume, and the follow-up price action. So I want to walk you over to something that the way that we teach it, we call exhaustion. You might have heard it in other ways known as a cleanup print. You might know it as capitulation. So I guess really what we want to talk about is, let's just say, for argument's sake, let's say Sal owns a hedge fund and Sal is buying or is dumping, in this case, he's dumping Google stock. He's like, right now I don't like it at that level, or I just have too many shares. I want to get out of it. And he's selling it. And as he's selling it down, he's got like let's say, a couple of million shares left. And he knows that he's basically been the one pushing it down, because every time he slows down, it bounces a little bit, right? So he calls up Mark and he calls up Brian, and he's like, hey guys, look, I have 2 million shares of Google left. I don't want to just work it down because it's not really that many shares. If you guys give me a good print on that, you could take the whole thing, right? That's completely legal. Nothing wrong with that. Two people on the phone negotiating a price happens all the time, every day. You probably see that if you have level 2 quotes and time and sales. At the end of the day, you're like, where did that 500,000 share print come from in time and sales? That's more than often what happens. There's a negotiated print, and that print hits the tape, right? Tape reading. So now we're going to dive a little bit deeper into reading the tape in Google, because we already know that that's a big support level. And you can see here, right? Earnings already came out. It's a big level where prices took off in 2020. But now we're going to add another element to this, which is volume. So now we all know that basically, again, because of what we just talked about here in this book, we need to say how many transactions happened and where did those transactions happen. That's a big thing too. We're going to take a look at another stock that broke out on Friday that I'm looking for follow through. I'm going to actually walk you through the trade idea on that one. So if we look at Google and the move from here just prior to earnings and where we are right now, pretty darn decent move to the downside. That's almost a 20% move to the downside. But that's only a part of the equation. I want to take a look at over here is the size of the volume, and especially the size of the volume over here on Friday, where we had heavier than normal volume. If you could take a look over here and look at the volume over here, what's normal for this stock, and look at what happened on Friday on the reversal when it closed back near the high of the day. We actually had heavier volume. And again, you can see one of those cleanup prints at the end of the day where Google closed near the high of the day. Now, I want to be clear about this, because we get a lot of people that'll say, you're calling a bottom. You're not looking at order flow. You're right. This is not looking at order flow. We're looking at an alternative trade and asking ourselves, has the stock bottomed out? If the stock has bottomed out and we can identify our risk point, let's just say it. Let's be friends here on YouTube. Everything we talk about here is for educational purposes, but let's be friends. If we identify a risk point that we believe, and we believe that we've spotted the end of that short-term selling, now here's the part that everybody misses, and we hold the bid. So we're talking about right now, the week of November 7th, we now need Google to trade above Friday's high and hold Friday's low as a stop loss point, because we've already looked at that work its way through, right? This level right here. Let's actually zoom this out here, and let me get the volume off of there. So you can see here this price action. Now, actually, if I was doing this in our community, I'd probably be looking at that level down there, roughly around 83.50. So probably somewhere around 83. So if we're opening up around 87, somewhere in that area, and just below 83, that's roughly a $4 risk. So we're looking at roughly $4 risk. Now, there's a couple of reasons. We found support. We saw exhaustion. It looks like the end of the selling. We had a strong day on Friday with better than average volume. Is this an A-plus trade? No, it's not. Is it a trade to consider with the proper position size and context going into the trade? I think it is. I think that in this particular situation, now again, raise your hand and you have to ask yourself, what kind of experience do you have? Do you want to trade only in the direction of the perfect ideas, or do you want to start to open yourself up, if you have discipline, to get out? Now, again, a lot of people will message me over the weekend or let's say Tuesday night, if this happens to not go up, you were wrong, you were wrong, you were wrong. And they didn't hear the part about me getting out if it didn't follow through. They didn't hear the part that I'm about to talk about, which is this would be what's known as a P1 entry, which means initial position size, because it's against the recent order flow, but we think we've identified a spot that the stock is not only finding support, but the volume is supporting that buyers came in at that same level. So P1 entry is a trade that I would take when it's less than obvious, but I have some reasons for it. So essentially what I'd be looking is to get a really good initial entry with much lower initial risk, because it's against that recent catalyst, which in this case was earnings. So what does P1 mean? Essentially, it means that if I know I normally want to get 1,000 shares of stock, this particular entry, which would be my tier one, my initial entry, my starter position, Jesse Livermore used to call this his probe position, it would be roughly 25% or 1/3 of what I would normally do. So my risk profile is dramatically reduced because of the kind of trade that it is. So I want to be super clear. Please don't pick apart 30 seconds of what I just said. You have to take the whole trade in totality, that there's 4 or 5 different reasons I'm looking at it. If the trade works out, if we stay above Monday's opening price, if the daily charts go well bid, which is higher high and higher low, and we move a certain distance in my direction, in the direction of the idea, I will consider adding after my initial position. If the stock and that support level does not hold, I have 1/3 of, or 25% of what would be a normal position. And if it doesn't follow through, I just kick it out and I go to the next idea. All of that is the trade, not just one piece of it. It's like you can't open a book and say, I read the whole book because I read page 5. You have to read the whole book. I reduced my position size. We built an argument for the idea. We talked about why we think support's going to hold. We added volume into the trade, which is volume came in. Somebody with a lot of money stepped in at that price, and the stock closed strong. Is this an A+ trade? No. Is it a trade that I'm absolutely going to consider? Yes. The stock's down 20% in the last week and a half, found support, and volume came in at that support. So what we're looking for now as we stack the order flow is somebody whoever that is. And again, don't get all bent out of shape of who's buying at that level. Who cares? It found support at the level and volume came in. If we get our initial position on exactly the way that I just outlined it, and it follows through, cool, we got a great entry. If we put that initial piece on, it rallies a little bit and then trades below 83, we hit the road, pay the expense, and we look for the next trade. That's how a trade is built from start to finish. Now, a lot of the problems that a lot of really smart people have in trading is they do these kind of analysis and they build this kind of a trade argument, and they get to the point where they're like, I'm right, the market's wrong, and no matter what happens, I'm going to hold this because I did the work. I stayed up late last night. I did all this work. I'm right. Professional traders do not think that way. Professional trading is like fishing. You have a great idea of where the fish are. You throw the line in the sand. Sometimes they steal the worm. Sometimes you catch them. If they steal the worm, fine. You pay the expense and you drop another line in the sand. That is what real trading is about. If you are holding trades from 2021 that you did not get out of, I'm sorry, it's painful, but that just means that you need to level up one more part of the trading equation, which is, how do I know if it's no longer valid? Now, one final thing, and again, this is all trading education, right? This is all, you got to make that final decision on your own. When I have a position that I don't like anymore, and maybe, look, I'm human like everybody else. Maybe I made a bad decision and held it just a little bit too long, or it moves too fast against me. I will always scale out to get some of that buying power back, and quite honestly, get my head back because I reduced my exposure to the market. The reason we get from a lot of people, but if I get out, and what if it moves again without me? Okay, get back in. What's stopping you from getting back in? If you still like the idea and 30 days later it does exactly what you thought it was going to do, get back in. What's stopping you from getting back in? Those are the things that you need to write down and really make a part of what you do. Because remember, when you know what you're looking for, you're no longer lost. And when you know what to do, you're no longer trading from emotions. That's a big part of trading. Again, raise your hand if you place trades where your heart's going up and down every time the stock moves. When you plan this stuff out, so we just mapped out an entire trade in Google before the thing even happened. We also talked about the quality of the idea, what kind of position size, what the stop loss was, what the initial target was. Initial target, actually, let's talk about the initial target. If we're talking about risking $4 and our entry is going to be somewhere up in this area around 87, then essentially what we're looking at is $12. So we're looking at roughly around 98, 99, somewhere in that area. That's going to actually be the initial profit target. So that's the whole trade from start to finish. And again, please don't pick apart 5 seconds of that whole trade scenario. You got to put the whole thing. The part that most people miss is the stop loss. I am perfectly okay if a trade that I like doesn't work out. Pay the expense, get the money back, go back to making it on the next trade. Remember what we saw from Braden there before. Small losses and one big trade makes the entire week. Maybe that big trade this week is going to be in Meta. Maybe Meta this week on that short-term news catalyst rallies from Monday's open through Friday just because they're laying people off and cutting expenses. It's always a short-term boost to the bottom line. Okay, let's take a look at some other ideas so you have some ideas going into the week. I just talked to you before about this list of basic material stocks. We posted that in the list on the bottom. So what we want to do last week, you remember that, if you remember last week, one of the bigger ideas that we had last week that was phenomenal was Boeing. When the market actually got hit on the FOMC announcement, Boeing was all of a sudden just standing there as this bright, shiny trade of stocks that held the bid when the market went down. Now, when we're looking at this as far as doing a scan on that, what we normally do is we go in and we put on our basic template, and we're going to look at which stocks were actually strong last week by at least 10%. And you can see that brought the list down to 15 stocks. So I'll actually just put this up over here, and I'm going to put on the charts if you want to take a list. So what's interesting about this, oh, and actually I got to get to that other stock that I want to talk to you about. There are opportunities in stocks despite the fact that the market's going down. So remember what we talked about before. If the market's moving too fast for you, slow it down. The way you slow it down is say, this is the only thing I'm looking for. And if that's all you're looking for, the stock market becomes so much easier, which is why, again, you can see those kind of wins in our community because we're only looking for order flow. And then from order flow, we ask the question, is it still valid? Once you have those two pieces in place, you're like, yeah, it's still good. Cool. Let's hang on versus, oh, it's changing. Maybe we should make a different decision. So this list of stocks is looking pretty darn good heading into the week. You can actually see some of them are actually right near breakout levels and looking to see if they have some room to go. But the one idea that I do want to talk about this week that I think is pretty darn interesting, and a stock that I have recently been trading quite a bit. You can see this nice rally. You can see this nice rally over here. Earnings out of the way. General Electric kind of hanging right around this 80, 81 level. Look at Friday's price action. Thursday was a reversal candlestick, followed by Friday with a bullish gap that closed on the highs right at this resistance level. And you can see we have roughly $12 up to the next level up here in General Electric. So if we map out this trade again, let's actually just walk through this again. So we know that's the target up there, right? And we know that this is the where it broke out, right? This is the big bullish gap on Friday. That candle on Friday, here's something that I want to hit you with right now. Real breakouts follow through. For some reason, especially new members that come into our Discord community, they're like, breakouts, 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 breakouts. And when one breakout or two breakouts doesn't fail, immediately their mind shifts to breakouts don't work. Breakouts work. What you need to work on is if they fail, which happens once in a while, you have to take the loss. So if GE follows up on today from Thursday and Friday's buying pressure, looking to put a new position on, if it closes above Friday's high, if it breaks down and takes out Friday's low, I'm done. I'm out. Buyers did not hold the bid, did not step up. If they did, then we're looking for a run up towards 92, I believe it was. So you can see the difference in the price action here, right? A lot of people would say over here to this gap fill, but I'm looking more up in this area over here. So what's the main thing that I want to hit you with this week, right? There's plenty of opportunity. Tech stocks, whether you're bearish or bullish on them, same way. Obviously, the big picture is bearish. We're looking at maybe a short-term catalyst in both Google and Meta, one type of play. We've already talked about basic material stocks leading the board. And actually, I don't know if you caught that. You might want to take a screenshot of this as well. You can see heading into the week, basic materials at the top of the list and strong across. Energy kind of paused a little bit, still in play this week as well. The bearish side of things, you can see technology is dominating the list of bearish stocks this week. So, man, there is a lot of opportunity if you know what your trade objective is. How long do you plan to hold the trade? If you normally hold the trade a week, then you have to look at charts that will tell you if it's still valid. If you normally hold the trade for an hour, you have to look at charts or read the tape on those charts. If you do what's called position trading and you're holding it maybe from one earnings report to the next, there's pretty good opportunities in those kind of ideas as well. You're probably going to be looking at a little bit higher time frame charts, and the stock's going to fluctuate a little bit more simply because you're holding a little bit longer than maybe a normal swing trader would. So whichever ones those are, I'm going to challenge you now. Remember what I said before, how you spend your spare time will dictate how you spend your future. So ask yourself, do you have an extra 15 minutes to learn how to make money? Do you have a little bit of extra time to say, here's how I know if it's still valid? Do you have a little bit extra time to say, you know what, maybe I should look at the market first before I just go to look at buyer stock? Maybe I should look to see how far a stock moved just prior to buying it. These are the little things that will level you up, and you'll be shocked at how much trading becomes easier when you have these decisions made before you hit that buy button. All right. Thank you so much for joining me here today. If you happen to be watching this on replay or right now, make sure you hit that subscribe button. Would mean the world to me. Also lets me know that you like this kind of video. All right. Have an awesome day, everybody. Let's make it an awesome week. Take care now.